It's December 26, 2024, and we are in the final countdown for some crucial tax saving moves. My name is Yasin Nizami, and I create content on the financial education that you don't really learn at school. And today we are diving into the last minute strategies to optimize your taxes before the year ends. Whether you're a young professional, a seasoned investor, or a business owner, these tips are for you. Let's make these final days of 2024 count for your wallet. First up, tax loss harvesting. This one is for you, investors. Let's say you bought 100 shares of NVIDIA for $100 each, and now they're worth $80. Oh my God. So by selling them now, you can claim a $2,000 capital tax loss. This can offset any capital gains you have had this year, or even be carried back up to 3 years. Remember, trades need to be settled by December 31st, so you have to act now. Next, let's talk RRSP. This applies to all the income earners, okay? If you are salaried employed, you must have RRSP contribution, and your employer must be matching your contributions to free money from employer. So why you should not take it? But it's especially powerful for high income individuals. The 2024 limit is $31,560 or 18% of your earned income, whichever is lower. For example, if you are in the highest tax bracket and contribute the full amount, you could save over $14,000 in taxes. If you're planning a TFSA withdrawal, this tip is crucial for those of you looking to make a big purchase in early 2025. Okay, let's say you need $10,000 for a home renovation or a down payment towards your house purchase. If you withdraw it now before December 30th, then you can recontribute that amount as early as January 1st, 2025. But if you wait until January 2nd to withdraw, then you will have to wait until 2026 to recontribute that amount. So you will lose that recontribution benefit if you just missed by 1 day. One of the ways to get your incomes blessed is charity. If God has given you wealth, you should be giving charity as a token of appreciation. This one is for you, all the philanthropists out there. In Canada, you can get a tax credit up to 33% of your donation at the federal level, plus some provincial credits as well. For example, if you donate $1,000, you could save up to $500 or more on your taxes, depending on your province for sure. So check your provincial tax guidelines in addition to that. Entrepreneurs, if you are expecting a lower income year in 2025, consider deferring some of your December income to January. For example, if you are a consultant, you could delay sending invoices until the new year. On the flip side, if you need to make any business purchases, do it before December 31st to claim that expense this year. And for all you investors out there, don't forget to pay any investment-related expense before year end. This includes interest on money borrowed for investing. For example, if you have a $10,000 investment loan at a 5% interest, paying the $500 interest before December 31st means you can deduct it on your 2024 return. If you got kids, this is one for you parents. The government will match 20% of your RESP contribution up to $2,500 per child per year. That's free $500 from the government. If you haven't maxed out your contributions for 2024, do it now. And now, a couple of special considerations for 2024. You know that federal government has increased the capital gains inclusion rate this year. So if you have capital gains in this year, which is $250,000, you should take extra considerations in terms of paying an extra capital gain tax on that. And it depends upon your personal situation. So seek out a financial advice from your tax lawyer. If your taxable income is over $173,000, keep an eye on the new AMT rules. AMT means alternative minimum tax. It may or may not be applicable on you. So it depends upon your situation. So I think you should also check with your tax lawyer if you are impacted under the new rules of AMT. And there you have it, folks. These strategies can help Canadians from all walks of life Save big on taxes. Remember, everyone's situation is unique, so it's always best to consult with a tax professional for personalized advice. If you don't have a personalized tax consultant, reach out to me. I have a financial advisor and a tax advisor in my team, so I can connect you with them and they can give you a personalized tax and financial advice. Anyway, if you like this video, give me a thumbs up, subscribe, and I will see you in my next video. Take care. Financial education is very important for everybody, especially for the kids who are still at school, because when they grow up and go into the professional lives, if they don't know how to manage their finances, that is going to be a disaster to begin with. I have just published an ebook for the kids aging between 10 and 16 years to understand how they can manage their finances. So when they grow up, they know exactly how to manage their personal finances, because I have broken it down at a very, very basic level. What is money? How can we save? How can we invest? What is debt? How can we use debt? What is credit card? And how we can set ourselves for the financial future when we go into our professional life. So if you are a parent looking for a very simple to use ebook for your kids, click the link below to order the copy for your kids and let me know what you think about that. Let's get back to the video. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.